We have indeed got back to on ground events considering control measures post pandemic, but are increasingly getting accustomed to this as a safer and more convenient format of attending and conducting the roadshow. We hope you get the same or better experience from the comfort of your home and office. Before I review the functionality of the webinar, I would like to bring to light that Venus Pipes and Tubes is a fast growing stainless steel pipes and tubes manufacturer and exporter in approximately 20 countries. Its products have an application across diverse sectors, including chemicals, engineering, fertilizers, pharmaceuticals, power, food processing, paper, and oil and gas. Moving ahead, you'll be kept on mute throughout the event, and all questions will be answered via the Q&A chat box only, and where you can type your question in session or at the end of the webinar. I would request all participants to please limit yourself to 3 questions if possible, and use the lowercase font while typing the question. If we miss answering any of your questions, don't worry. You can email us at ipoteam@conceptpr.com and we will try to be swift in responding back to you. Going forward, it's a great pleasure to introduce our speakers today. From the company, we have Mr. Arun Akshay Kumar Kothari, Managing Director and CFO, Mr. Kunal Bupna, President, Finance and Accounts, and Mr. Dhruv Patel, Whole-Time Director. The representation from the book running lead managers are Mr. Satish Mukuttar, Vice President, SMC Capitals Limited. On behalf of the company and lead managers to the issue, let me thank all participants for being a part of this session. I invite Mr. Satish Mukuttar from SMC Capital Limited to deliver the opening remark and commence this press meet. Over to you, Satish. Sir, you're on mute, sir.
Thank you all. Good afternoon, and thank you for joining today's webinar. I would like to take the opportunity to welcome each one of you, along with the panelists, to launch of maiden IPO from Venus Pipes and Tubes Limited. The issue size is around 50 lakhs 74,100 equity shares, and price band which we have declared today is rupees 310 at a floor price, and on a cap size it is 326 rupees per share. The issue is opening on 11th of May and will be open till 13th of May. Anchor book will be available for subscription on 10th of May, that is one day prior to the opening of the issue. Regarding the company, when we started discussing as a banker, what we liked about the company is that 4 different people who are the friends and in the age of where everyone rush behind the idea of new age businesses ideas, the 4 different background people come together and supported the idea of starting a manufacturing business that is into steel tubes and pipes. And within the 6 year span of time, they are reached to a stage where they can approach a public market and confidently ask for a capital for their further expansion plan. I would like to introduce Arun Kothari and to request him to share his journey in few words so that we can move on to the presentation.
Thank you, Mr. Mukuttar, for the introduction to Venus Pipes and Tubes Limited's initial public offering and issues key highlights. Globally, the stainless steel pipes and tubes industry was estimated to be valued at USD 32.4 billion in 2019 and is expected to grow at 4% to about USD 40 billion by 2025. Would now request the webinar team to please play the corporate AV of the company for the attendees to gather a better understanding about the company. Thank you. That was definitely insightful. I would now request the company team to please take us through the organization's journey, its struggles, its victories, subsequently take the attendees through the company's investor presentation to cover its business and financial details, as well as touch upon its key strategies going forward. Over to you, Mr. Kothari.
Good morning to all. First of all, thanks for attending this webinar. Venus Pipe, we had started, our plant is located in Dhanetic, Kutch, near to Kandla and Mundra Port. Basically, Venus Pipe in manufacturing business of the stainless steel pipes and tubes. Or we are manufacturing basically two types of tubes, seamless pipes and welded pipes. Venus Pipe journey started with the capacity of the 2,400 tons per annum from the year 2015, or by the year FY 2021, Venus Pipe has reached the capacity of the 10,800 tons per annum capacity. We are supplying to chemical industry, pharma industry, engineering industry, to all part of the India. Or Venus Pipe main clientele are primary clientele are Aarti Chemical, PI industry, and then UPL in engineering sector. IGAC is our client, BHEL is our client, Praj Industries is client. It's mainly Venus Pipe has achieved the top line of the FY 2021, almost 310 CR. It has started January first year of the operation. Venus Pipe achieved the top line of the 30 CR. We had in the span of the 6 year, Venus Pipe has reached the from top line of the 30 CR to 310 CR. We are basically four promoter. Myself is Arun Kothari and Dhruv Patel is with us. My qualification is I am the chartered accountant by qualification. Mr. Dhruv Patel is the by qualification engineer. Our two other promoter, Mr. Megharam Chaudhary and Jayantiram Chaudhary, is also with us. He is previously with the trading experience of the same line of business for last 15 years.
Thank you. So we can move ahead with Mr. Kunal Upna taking us through the investor deck. Kunal, would you like to take over?
Yes.
Go ahead, sir.
Yeah. Good afternoon, everyone. Thanks for giving your precious time to understand about our company. I would start with the company overview. Dear sir, we are manufacturer and exporter of stainless steel pipes and tubes in India. We manufacture two category of pipe. One is welded, wherein our capacity is basically 600 ton a month, and other is the seamless category of pipe, wherein our capacity is 300 ton a month. So the total capacity we are currently having per month is 900, which tantamount to 10,800 metric ton for a year. Just to slightly explain you about welded and seamless. Welded is a pipe where you do a joint, and seamless are the category of pipe where there is no joint. So from the just to differentiate between them, seamless pipe can withstand more pressure as compared to welded pipe. So we are strategically located from the perspective, we are located in Dhanetic, Kutch, Gujarat. It's basically 50 to 60 kilometers from both Kandla and Mundra port. And we do import our raw material from Indonesia, Malaysia, China, and we do export to many countries like Brazil, UK, Israel, and countries in European countries. And we export, till date, we have exported to around 20 countries around the world. Just to brief you about the shareholding pattern, the promoter and promoter group currently holds 64%. And the public hold, the rest is held by the public, it is around 36%. Of that, 14% private placement we have made in the month of October 21. And balance 22% is held by close friend of promoters. So we in our company is having 4 promoters. Mr. Arun Kothari, he is a managing director and CFO. He is chartered accountant by qualification, and he looks after the financial and purchase aspect of our company. Mr. Dhruv Patel is engineering by qualification, and he looks after the technical side of our business. And the other 2 promoter, Mr. Jayantiram Chaudhary and Megharam Chaudhary, they are basically prior to starting of Venus, they were in the trading of steel pipes and related steel products. So they were quite conversant with this business. So they basically, these 4 are friends. They found an idea, it's an ideal mix where one can look after technical, other for financial, and rest two for business. So they come together and form Venus Pipe in the year 2015. We started with 200 ton a month, and for the FY21, wherein our full production capacity was installed and working, it was 900 ton a month. Apart from these four promoters who are also on the board, we have another four independent director. Mr. Kailash Nath Bhandari, he is an independent director. He is also on the board of Hindalco Industry. Mr. Paranay Ashok Surana, he is a mechanical engineer. He is done from IIT Mumbai. Mr. Komal Lokesh Karidias, he is company secretary by qualification, and he is also a woman director. And Shyam Agarwal, he is a doctorate of law, and he is also on the board of Southeastern Coalfield, which is a subsidiary of Coal India. So we have on the board of director 8 members. So the facility, the current area what we occupied for our facility is around 34,000 square meter, and out of that 22,400 is occupied by us for our current facility, and the leftover around 12,000 would be used for our future projects. Apart from that, we have also procured land of around 32,000 square meter recently. That would also be used for our future project ahead. Sir, as I said you, there are two category of pipe we manufactured. One is seamless, other is welded. For manufacturing seamless pipe, we procured hollow pipe, and that is mainly imported from China. And the capacity is 300 ton with a dia size of up to 4-inch dia pipe we manufactured for seamless. And for welded pipe, we procured stainless steel coils. It is procured from indigenous, and also it's imported from Indonesia, Malaysia, and other countries. And the size of pipe what we manufactured for steel coils for welded pipe is up to 8-inch and with a capacity of 600 ton a month. So we have around 200 number of permanent employee on our roll and 159 number of contractual employees. And as I said, we have a total capacity of 10,800 metric ton for a year, and we are utilizing to an extent of around 90%. For going forward expansion plans, sir, I will detail you in the later slide. Sir, there are the category of pipe what we've manufactured is basically found uses in many of the industry, and it is basically industrial use pipe. So we supply to chemical industry, like we supply some of our customers in those sectors are Aarti, PI, Hikal Limited, Deccan Fine Chemicals. For engineering, we supply to Praj Industry, IJAC Heavy Engineering, L&T, Bhel. For fertilizer, we supply to GSFC, GNFC. For pharmaceutical, we supply to Lupin, Alembic Pharma. For power, we supply to JSPL. For food processing, we supply to ITC, Amul. For paper, we supply to JK Paper. For oil and gas, we supply to ONGC, BPCL, IOCL. So these are a few of our customers whom we supply, and these are the different category of different sectors where our product found their usage. And these clients demand different standard of pipe to be supplied, and we at Venus are equipped to supply as per US standard, as per European standard, as per Japanese standard, as per German standard. And these are basically required for the critical applications. Sir, as I said, these pipes are used for the critical application, so the company should be equipped with those all in international accreditation and product approvals, and we at Venus are equipped with those. We are ISO 9001, 14001, 45001. We are certified to supply IBR grade of pipe. We are also supplied. We are also accredited with PED from TUV for supplying in European countries. Sir, we currently supply to 57 of Indian 500 Fortune companies. Sir, there are few PRs also, but our PRs are also in the business. For few of our PRs are Ratnamani Metal Jindal also. But we at Venus is specialized in single category of pipe, that is stainless steel. They are also doing SS, and they are also doing in carbon steel pipe. Sir, our product what we supply has got a multifold demand. Multifold is a perspective, sir, the demand would be there for from the three category basically. First, the demand would be there for the new project. Second, the type of industry where our product found their usage, basically chemical, sugar, and other industries, is the nature of those products. They will corrode away the pipe over a period of years. So there is always a replacement demand from those customers. So this gives us an annuity type of business, wherein over a year you had an order from these clients, and it's make a good satisfaction to them, and it's make them a repetitive client for you over a period of year. So the categories are broad categories are new projects. Second would be basically replacement, and third would be repair and maintenance. But definitely repair and maintenance will be always on a lower side. And because of this continuous demand, it make up for a strong order book on year basis. Sir, customer diversification, we sell both in domestic and international market. For the 9 month ended, we had a top line of 276 crore. Out of that, we have export turnover of around 26 crores. So basically, we have a 90% domestic sale and 10% in export sales. And we supply, as I said you earlier also, sir, we supply to around 20 countries, and majority or few of the country where our is majorly goes is Israel, Brazil, European countries. And for domestic, we supply direct to industries, and we also supply to trader and stockist. And for industry, for the end user industry, we predominantly out of the direct supplies, predominantly we supply to chemical industry. We found a good chunk of it. It's around 55 to 60%. Then is engineering industry, which form around 35 to 40, and then our other miscellaneous industries to whom we supplied. So this was basically was in relation to what we currently do. We from the IPO proceed, we are targeting. There is no FS in the IPO. The entire money is coming in the company, and the predominant purpose of the IPO is toward capex. We are targeting 108 crore of capex, and just to give you, just to make it easy, I would divide my capex into 4 buckets. First bucket would be the expansion of welded mill, which is currently we are having a capacity of 600 ton, which would be further expanded to another 600 ton a month. So our total capacity post expansion would be 1200 ton. So we are expanding our welded mill by 600 ton a month. And along with that, as currently we are manufacturing 8-inch dia of pipe, going forward we would be manufacturing up to 48-inch dia of pipe. So it would be, we would be among few in the company, in the country, who would be manufacturing up to 40-inch dia of pipe in India. Second would be, sir, expansion of our seamless pipe category. Currently what we are manufacturing is 300 ton a month. We would be expanding by another 500 ton. So the total capacity post expansion will be 800 ton. So it would be expansion of 500 ton a month for seamless category. And with a dia size up to 6-inch dia, we would be manufacturing. Thirdly would be, sir, third bucket would be backward integration of this seamless pipe. Currently for manufacturing of seamless pipe, we procured a hollow pipe from the market. Going forward, and that is basically imported from China. Going forward, we would be putting up a piercing line, wherein we would be procuring round bar from the Indian market, and we will be manufacturing hollow pipe out of that. And that hollow pipe would be in turn used to manufacture that seamless pipe. So it's basically Atmanirbhar, wherein we would be manufacturing hollow pipe within our plant only, and though that capacity would be 800 ton a month, and that entire 800 ton a month would be internally used for manufacturing of seamless pipe. And fourth would be, sir, we would be putting up some acid regeneration plant to become more environment friendly, to reduce the uses of acid fumes and in our plant, and it will also save on cost perspective basis some high-end quality machine and few other machine to support this going forward expansion. So basically, just to summarize those expansion, it would be expansion of 600 ton for welded mill, along with dia size up to 48 inch, expansion of 500 ton for seamless pipe, backward integration. Third would be backward integration of seamless pipe manufacturing, that is manufacturing of mother hollow pipe, which would be 800 ton a month. And fourth would be this machinery to support this going forward expansion. So the major proceed from the IPO would be going towards that. Apart from that, sir, 25 crore would be going for working capital. As with this expansion, the company would be requiring working capital, and the rest would be for general corporate purpose and issue expenses. So with these expansions, sir, we are targeting, we will be targeting increasing export. We would be increasing our operating efficiency by putting backward integration of plant, by making dias of 40-inch dia of welded pipe, which very few in India manufactured, and with increase in capacity, those efficiency will flow to the company, and in turns will improve our top line and bottom line, and it will strengthen the Venus brand in the market. So it's very important to the industry where we catered our product. So there are a number of chemical industry in India, and everybody now and then we are hearing a story of chemical plants are coming in India. So we believe it will be showing a robust growth going forward. And with that, we estimate from the DNB report that currently, which is estimated 178 billion, which is slated to grow at 300 billion by 25. Similarly, for pharmaceutical industry, which is expected to grow a CAGR of 10%. And there are various schemes of government to these industries, like production link incentive for food processing for medical industry, Atmanirbhar Bharat package, then for oil and gas, hydrocarbon exploration licensing policy. So for chemical, there are CPDS. So these all policy will help this industry. And as we are directly dependent on this industry, so it will in turn help us to grow. So this is our maiden IPO. This is the fresh equity share, and the objective, as I said, is towards capacity expansion, meeting the long-term working capital required and general corporate purpose. We are offering 50,74,100 shares, and we currently have 1 crore 50 lakh number of shares. So basically, we are donating 25% of our equity. The issue is going to launch on 11 to 13 May, and the sole book runner is SMC Capital for this issue. Sir, as I said, we started with 200 ton a month in the year in 2015, and currently we are running with 900 ton a month. So over a period, we have been able to penetrate in the market and make our presence feel. So, and similarly, what has happened, this has helped us to grow in revenue and grow in the bottom line, both from this perspective. With the required approvals, with the required qualification, with the confidence from the customer, we have been able to ramp up our operation over a period of year. Against FY19, we had a top line of 118 crore. For FY20, it was 177, and we ramped it up to, for the FY21, 309 crore, and for the 9 month ended, it is 276 crore. And similarly, the EBITDA had also been increasing from 8.2 crore to 11.7 for FY20. And for FY21, it was 34.8, and 9 month ended, it was 35.5. Basically, you can see the margin from 6.9% to 12.83 for the 9 month ended December. And similarly, the PAT, which was 3.7 in FY19, which had been improved to 4.1 and 23.6 for FY21 and 23.5 for the 9 month ended December 21. Sir, with this growth and all, similarly, the company balance sheet had also been improving. From the FY19, 12 crore of net worth, we improved to 120.5 crore of net worth for 9 months ended December 21. This also include the private placement we made in the month of October 21. We had a borrowing of around long-term and short-term borrowing of around 50 crore in December, along with 22 crore of non-fund based limit. And similarly, as I said, with the growth in the business, the balance sheet size, the ratios have all been improving over a period of years. So if you look our sales revenue from 118 to 309, it's basically CAGR of 61.35, and similarly the EBITDA, operational EBITDA has improved from 6.9 to 11.25%. As I said, with the increased production, with the increased efficiency, with the more direct supply, with more approvals all in place going over and year, we have been able to get those figures. And similarly, the PAT from 3.11% to 7.57% for the FY21. So this was just a slide brief on our company.
Thank you, Kunal, for taking us through the presentation. We hope the attendees have captured enough and more understanding about Venus Pipes and Tubes business model, its financials, its execution capabilities. Before the floor is open for participants to ask questions, I would like to reiterate to type your name and organization details in the Q&A chat box for the moderator to take note and address your query. Note, in the interest of time, we will be restricting to 10 to 15 questions only, and repetitive questions will be skipped. Uh, Gentlemen, there's a question which is asked about what will be the promoters holding post IPO.
Yeah, it would be post IPO, it will be 48%.
Okay. The next question being, what has helped you register a higher margin for the last 21 months in terms of operations?
As I said, you sir, we started in 2015. So over a period, we were building, we were penetrating the market, and 2021 was the full year of operation where our entire capacity was fully in operational. So we were able to drive those prices, and also the operation efficiency with the large scale production was there with the company, and all the required approvals and all were in place. So those that drive those margins.
Thank you. Could you indicate what is the export revenue contribution in your top line?
Yeah, for the 9 month ended, it is around 10%. So we have a top line of for the 9 month ended 276 crore, and we have export revenue of around 26 crore.
Thank you. We'll just wait for a few more questions to come in from the attendees. Sir, could you indicate us, what was the opportunity loss the company had during the pandemic or due to the pandemic, and how are we operating right now?
See, sir, what has happened in pandemic? We supplied to critical industries, and Kutch was not that much affected during the first round of pandemic. So we got the approval from the collector of Kutch to operate our plant after 30 days of COVID. So in the fag end of April 20, we got those approval, and being supplied to critical industry, we were operating after that, and pandemic has not that much affected us.
Okay. We'll just wait for a few questions to come in. So there's a question which asks that, how have the raw material prices moved over the past few months, if you could state so?
Yeah, it has been. If I compare FY21 with 9 month ended, the raw material prices has shoot up by 20 to 25%. But in our case, we had a strategy as and when we are booking our finished good, we also book our raw material to a good extent of 80 to 85%. So we are not that much affected by that.
Okay. So what is your material cost as a percentage of revenue? How has the material cost as a percentage of revenue declined from 88% in FY20 to 82% in 9 month FY22 when steel inflation price is so steep?
See, sir, as I said, as we got the required approval, our entire operation was there for the 9 month ended December 21. So there was a better realization. So, and with the economies of large scale production and all, the RM ratio on revenue had declined from 88 to 82% for this 9 month ended December 21.
Thank you. Moving to the next question. Post your expansion, what will be the overall capacity?
Currently, sir, we have a capacity of 900 ton a month, and post expansion, we are the capacity blended basis taking seamless and welded, it will be 2000 ton a month. Apart from that, we would also be having a backward integrating capacity of 800 ton, but it would be internally used only. So from 900, it will be ramped up to 2000 ton.
Okay, there's a question which asks that the 60 crores raised in October 2021, but cash balance of 31st December is rupees 7 crores. Where was the funds deployed?
Yeah, that fund was majorly used towards working capital, and some portion of it had been used for capital advance for the project.
Thank you. Moving ahead to the next question, which asks which sectors drive the maximum supply of seamless steel, and likewise for any other category for your company and for the industry at large.
See, sir, we are supplying, we are targeting chemical industry predominantly, and our direct sales portion to the chemical sector is high. And we found that going forward, over a period also, chemical engineering, pharmaceutical, and this industry will drive our flows.
Thank you. Moving to the next question, which asks about what your manufacturing capacity utilization was in FY20 and FY21.
Sir, for FY21 it was around 90%, and for FY20 it was less than 70%.
Okay, sir. Moving to the next question. Your revenue from ops has grown 61% CAGR, EBITDA has grown 105%, PAT has grown 151% CAGR between FY19-21. How easy will it be for the company to continue this performance?
Sir, see, as I said to you, the reason for growth has already been explained. FY19 we had a top line of 117, and for FY21 it was 309 crore. So the operation has been ramped up, and the entire capacity for seamless and welded were operation in the FY2021. And in relation to sustainability, sir, see, we are putting up a backward integration plant wherein those margin will also accrue. We would be also manufacturing higher sizes of welded pipe, where in India there are only few players for that. So keeping all this perspective, we definitely believe the margins would be definitely be sustainable.
There's a question which asks that your current PP turnover ratio is more than 10, if that is going to see a continuation.
Our current
PPE turnover ratio.
PPE.
Fixed asset to.
Yeah. What is the question, sir? Can you repeat?
Your current PPE turnover ratio is more than 10. Is that expected to continue?
See, given going forward, number will be tough as that has not been categorized in RHP. But this has been, but with expansion, definitely it will be slightly be on the lower side.
Basically, it will be get rationalized over the time, since the new machinery which will be required for the new the expansion plan will be critical in nature, and it will be the cost of those machineries will be higher. So the asset turnover ratio will be slightly get rationalized going forward.
And further, we are also putting a backward integration plant, and those will be internally used. So those revenue will not come on the profit and loss.
Thank you, sir. Moving ahead to the next question, which asks about your cash from operations. In FY21, which was the best year, it was 11 crores. Or in FY20, it was 2.4 crores, not enough to, pay the interest of debt. Do you have some points to say with respect to that, sir?
Sir, if you see, it's a growing company. We don't have much debt on the book. So the fund was effectively utilized by us, and we have paid all the that cash flow itself shows we have paid those interest, those repayment, those were dues in those years. So keeping the growth of the company, as being we have a debt equity of 0.42 current debt. So we don't feel that is any issue, and we are effectively using our fund, and with this growth, this will be taken up.
Thank you, sir. What has been the impact of the surge in commodity prices on your pricing power?
Sir, as I said, what we currently do, we book our raw material along with that prices of when we are booking our order, and similarly, as these are required for critical application, so we are also able to increase the finished good of our price for the order we are going to take, not for the order what we have taken. But as I said, we booked the order for booked our raw material for the order we are booking, so we are not that much affected. Definitely, it increases our revenue.
Thank you. Moving to the next question, which asks about a brief explanation about your hedging costs and contracts.
Sir, we are having, if you see for 9 months ended, we are having an export turnover of 27, and we are having an import of around 33 to 34 crores. So it was not any hedging; it was a natural hedging in a way. But if required or further these ratios, there is a gap in this ratio, we will definitely take forward cover.
Okay. Thank you, sir. There is a question which asks with respect to your last placement, which took place at 280 per share, why there is a 16% premium in the last 7 months.
Sir, see, if you look my FY21 number, and if you look my December 21 EPS, and if you analyze it, the P for both FY21 and December 21 is in the same range bound. So it's not any much premium we are asking here. If you have to do but analyze for the December 21 number. So you will see FY21 and December 21 on annualized basis, keeping that 280 rupees price and keeping this 326 rupees price, the P would be in the same block only, of around 15 or 16.
Thank you, sir. Okay, given that there are no further questions coming in, and if any questions are unanswered, we will definitely look at responding back to the individual. Thank you, everyone, for showing interest in knowing more about the company, its leadership, its future potential. Now, I would now like to call upon Mr. Satish Manguthar from SMC Capitals Limited to make the closing speech before we end today's webinar. Over to you, sir.
Thank you, Lalit. Thank you, everyone, for listening patiently about the journey of the company. We are quite excited at SMC Capital being a sole running lead manager for the issue. I seek a support from the entire media community to give adequate coverage to the issue, considering the fact that there are a lot of issuances happening in the market. The positive fact of the issue is that after a long time, the entire issue proceeds is going through the company. There is no cash out from the promoter family, and that is a positive impact because the intention of the promoter here is to build a capex and to contribute to the growth story of India. And I hope that everyone understand the company's business model. I think a lot of questions has already been answered. If anything is there, you can contact to our PR agency where we can address all the questions, any other question which has not been answered today. And with that note, I'll seek your support to give adequate exposure to the issue and wish us a success for the issue. Thank you very much.
Thank you, sir. Esteemed audience, we've now come to the end of the webinar. We look forward to your participation and support in making this initial public offering a great success. Wishing you all a great day and keep safe.
Thank you.
Thanks.
Thanks, everyone.